Let me show you one of my favorite trading strategies, and we're using central pivot points, and this is ideal for trend following trading, pullbacks, breakouts, and you can use it on any market. I will show you how to use it on the US dollar, Indian rupee, gold, but it also works on any other Forex pair, crypto, stock, indices, and whatever. So first of all, to set up our charts, we go to indicator, and then here you just need to put in pivot, and then we choose pivot point standard. We click on it, and then let's set it up. So we go to here the indicator, and we open the setting. And what I typically do is we can start with the weekly, and then I untick everything, all the S and R levels, and I just want to have my P, which is the central pivot point. A tip, I always increase this to 999. You can even add more, and then you have a lot of pivot points going back. So that is good if you want to do some analysis. And then we just click OK, and then you can see we have something on our charts. So what does the pivot point does, and what does it tell you? So first of all, every week you get a new line, and the pivot point is so important and works so well because the pivot point is the same for every trader, and every trader has the same pivot point and the same level on the same charts. So it's 100% objective. It is used by a lot of automated strategies because automated algos, high frequency trading, they are always using those 100% objective things that they can easily use in a system. And one of the ways to use a pivot point is to look at it, is the market trading into the pivot point from underneath or from above? What does this mean? So if you see that the market is trading above a pivot point, coming into it from above, retesting it as support, even giving you a failed or fake breakout when we zoom in here, this is then often used as a trend following system. As long as the market is staying above a pivot point and staying above it and testing it as support, generally you would say you're in an uptrending environment. And if we have watched one of my previous videos, I have explained the market rhythm, and very often this is how the market moves. It's moving in waves. It's not going up in one straight line. It's going up and down, up and down. And as a trend following trader, ideally you would like to catch obviously those phases where the market is going up very strongly. And what do they have in common, and what do they often do is that they retest or fake out the pivot points. So very often you will see that those pullback periods, those moves here that go into the opposite direction, they are often moving into our pivot points, and then they are testing them from above as support. They are sometimes rejecting them or giving you a failed or fake breakout, and then those can be trading situations. So very often you can see that we have a break and a retest, a break and then a retest, and then you could use things like pattern breakouts. So you would look for a trend line, for example, and then you can see going forward the market breaks out of it, trades higher, retests this area, breaks higher again, gives you another pattern, and then you can find this rhythm of the market. And this rhythm of the market is very repetitive, at least in trending phases. So in trending phases, the weekly pivot point works really well, and then there's sometimes coming this shift where you see the market is trading above the pivot point, so we are in an uptrending scenario, and then we are breaking below the pivot point, testing it from underneath. Now the pivot point becomes resistance, whereas previously it was support. And when you see that this shift happens, then you are changing the trend direction. Now you are not moving higher anymore, but you're moving lower with lower lows and lower highs. And then those points where you have your pullbacks, those are now moving into the pivot point from underneath, and that is then where you look for pullback opportunities, because obviously if you want to trade a trend, the best way to trade a trend is those long trending phases and not get caught up in those pullback phases. That's where you don't want to trade. You want to go with the trend, and the pivot points help you to find pullback areas. And those pullback areas are often ideal for looking for trend following opportunities. You can see when the market is testing those pivot points from underneath, that's where you see good movements. And then once this shifts again, you are in a different market environment. You are now testing it from above. So we are changing here where the market is now testing it from underneath. Then it's trade testing it from above and again from above and again from above. And that is where you can very, very nicely see this market rhythm. And this works really well on the higher time frame or the lower time frames.